Here's a trading strategy that I tested that has a 75% win rate, and I tested it from 2003 to 2022. All right, so here's the strategy. It was created by Jim Brown. I don't know Jim. He hasn't paid me to do this. I just thought it was an interesting strategy. I wanted to test it and see what the results are. So I bought the book with my own money, and he didn't send me a review copy or anything like that. All right, so the strategy basically uses two custom indicators, the MACD Platinum and the QMP filter, and I'll show you how to get that later in this video. But those are the indicators that will be used. He has a couple of different methods in which you can use his indicators. One of them is trend trading, and the other one's kind of a counter trend. So I chose to test the trending part only because I wanted to see how that worked, and then I could test the counter trend later and then compare them and see if it's worth putting them together or maybe trading just one of them separately. Okay, so here's the trading plan. I was only trading in the direction of the trend, like I mentioned, because it's a trend following system. If price moved away from the moving average by a lot, I would pass on the trade because the stop loss would be really big and it would be harder to hit the profit target. Once a signal prints on the chart, I would just enter a trade on the next candle on the open, and there wouldn't be any limit orders or stop orders or anything like that. The stop loss would go on the other side of the last fractal or swing. I'll show you that on the chart in a minute, but that's where I put the stop loss. My profit target was 1 times the risk, or 1R. So if I had a 100 pip stop loss, I would have a 100 pip profit target. For this test, I used a set and forget mentality. So I would either let it hit the stop loss or the profit target. I wouldn't mess with it once the trade was put on. And finally, this method was tested on the Euro US dollar daily chart, but Jim says that you can trade it on the lower time frames or even other markets. You could test it on other markets also. So I look forward to doing that in the future, but as a really quick and dirty way to test the effectiveness of a trading strategy, I like to go with a daily chart, because you can knock that out in a couple of hours. And that gives you a good idea if the strategy has an edge or not. All right, so now let's jump over the charts and take a look at a few examples. All right, so here's what the indicators look like on the chart. On the main chart is the QMP filter, which consists of these dots and the 3 moving averages. On the bottom is the MACD Platinum. And since I'm looking only for trend trades here, I'm looking for the moving averages to line up. So the shortest one is going to be on the bottom and the longest one is going to be on the top in a downtrend. And I'll get into more details on the indicators in a bit, but I just want you to get the basic idea. So what I'm looking for here is a bounce off of the moving average. So price has to come pretty close to the moving average because we want to see a stretch in one direction and then a move in the opposite direction, right? So kind of like a rubber band, you want it to stretch. So I'm going to look for a bounce off of either the green, the blue, or the purple moving average, it doesn't matter. And once the red dot prints, I'm looking for red dots in a downtrend. So once the red dot prints, I'm going to enter on the open of the next candle. So I'm going to take the risk reward tool here on TradingView, put it there. And then the stop loss is going to go right above the last swing high or last fractal, whatever you want to call it. And I'm looking for a 1R or a 1 on that risk reward ratio. Right around there, close enough. And then I'm going to extend this out so you can see it. Okay, so that's what happened. And in this case, it did hit the profit target before it came back, and it might have stopped out, but it might not have. But yeah, it did hit the profit target pretty easily, so that's a good trade. All right, one more example in this downtrend. The next one is going to be here. So that's the candle with the signal on it. So I'm going to enter on the open of the next one. That's going to be the entry price there. And then the stop loss is going to go there. And then this profit target will be right there. And I'll move that to the side so you can see. And as you can see, that got hit pretty easily. And in fact, this trade had quite a bit more to go if you really wanted to stretch it. There's a possible 5R, so you could have gotten a little bit more out of that trade if the exit rules were different. And I've been experimenting with different exit rules, and I'll talk about that in my further research, but that's a good trade also, and it would have bagged the 1R profit target. All right, now let's look at some examples in an uptrend. In an uptrend, you want the moving averages to be stacked in the opposite direction. So the green one or the shortest on the top and the purple or the longest one on the bottom. Again, I'm looking for a bounce off of the moving average, and I'm looking for a green dot to signify an entry. So this is a good example because there are a couple of things here that are not quite the ideal entries. So for example, something like this would be something that I probably would have skipped because it's pretty far away from the turn here or the fractal. And it's also not really bouncing off the moving average. So I wouldn't have taken this trade, even though it did work out. But that's a trade that I would have skipped because it didn't fit the criteria. But if we go back one trade here, and then I'll put the risk reward tool on here. And this is a really good example because it's really close to the fractal. So there's a very high probability that the profit target will get hit. So this is a signal candle. Enter on the open of the next one. Stop loss below this swing, and then looking for 1R. And since the stop loss was so small on that one, it would be an easier trade to cash out on. For the last example, if we go back one more trade, that would be this one here. It's bouncing off of the blue moving average, or at least potentially bouncing off. I wouldn't know, right, when I took the trade. But it's a nice one because price is really close to the fractal, the turn. So you have a really small stop loss and you have a much better chance of hitting the take profit. So signal candles there. Enter on the open of the next candle. Stop loss below there. And then just looking for a 1R profit target. And as you can see, that's really easy to hit on this one. Now let's look at the total results. I tested this from May 7th, 2003 to January 19th, 2022. During that time, there were 84 trades, 75% of which were winners. Max losers in a row was only 2 trades, and the return was 42 times risk. So if you risked 1%, you would have made 42%. If you risked 2%, you would have made 84%. Now on the surface, this doesn't seem very impressive, right? Because you only had 84 trades over this long period of time. However, what I'm looking for here is an advantage. Do I have an edge? And if so, then I can possibly move this over to other currency pairs, possibly other markets, or I could niche down into lower time frames like the 1 hour or the 15-minute and test to see if it has an advantage there also. And that will generate a lot more trades. So I'm excited about these results because it shows that there is an edge here and it's a very simple trading strategy. And in future tests, I'm going to test ways to increase the return of this method and also test it on lower time frames and other currency pairs. All right, now let's talk about optimization. Optimization is the fun part, right? Because now that we've proven with a very simple strategy, just a 1R profit target, that the system does have an edge, can we make that edge bigger, create a bigger return with a similar system? So I did do an optimization. The alternate method returned a 112.95 times risk over the same period of the previous test that I just showed you. And if you're risking 2%, that would have been a 225.9% return over that same period. So if you want to see the strategy that I use to get those results, that's going to be available in my private membership area. It's called the Resonant Value Report. I send out a report every month. And the purpose of the report is to present research that can help you find valuable money-making opportunities, either in the Forex market in terms of trading strategies, in the stock market, in other real-life markets. I call it IRL markets, in real-life markets. That can be things like collectibles and stuff like that. And I also research the economy and some peak performance psychology methods. So if you want to get that report every month, head over to tradingheroes.com and you can sign up for that membership. But even if you don't want to sign up for that, you can take the free information in this video and start testing this for yourself. It's out there, it's available, and I've shown that it does work on this time frame and this currency pair. So the other ways that you could potentially optimize this is you could trail the stop loss. As you probably saw in the examples, a lot of these trades had a lot more room to run. So if you could capture some of that move, you could increase the return per winning trade. And of course, like I said, you can test other markets. You can test other time frames like the 1 hour or the 15-minute. Jim talks about it in his book. He says that he uses it on the 15-minute chart when he wants to day trade. Okay, here's how you get the strategy. The book is called MT4/MT5 and Trading View High Probability Forex Trading Method by Jim Brown. And I know that's kind of a cheesy title, and that's what turned me off on the book initially, because it's basically a title stuffed with keywords, right? And I've downloaded a couple of books with a similar title in the past and they didn't measure up, but this one did. And I'm glad I did download this book and actually tested the strategy. So the Kindle version is only about $10 and you get the indicators included. So that's fantastic. If you had to pay a programmer or buy the indicators alone, they probably would have cost way more than $10. So it's a great way to get a proven trading strategy. Jim does trade full-time for a living, and these are the methods that he uses. And of course, links to all of the resources that I have mentioned in this video are in the description below. Just click the show more link and you'll see all the links. But again, always test it for yourself, because the way you see the market, the way you see trades might be different from myself or Jim. And remember that even if it tests well on this one currency pair, it may not work on other currency pairs because they have different personalities. And Jim mentions that in the book also. So I would highly recommend getting the book, going through it really thoroughly. Then you download the indicators, stick it into MT4, MT5, or TradingView, and then use a spreadsheet to back test the strategies. He also gives you other small tips about how to optimize trading with this method. And he also gives a counter trend strategy, which can be useful also if the trending strategy doesn't work on certain currency pairs. If you found that video useful, hit the subscribe button and the bell so you get notifications when I publish more videos. If there's a trading strategy that you want to see tested, leave it in the comment below, and I can't promise anything, but if you have something that looks pretty good, I'll try and test it. Thanks for watching, and I hope your trading is going well.